So I was thinking about what a topic, a useful topic would be, and sort of I came to think that we talk about sheep numbers, flock size, and why that's useful for, and why we should care about it. And the reason I say why we should care is that it's not really a very sexy topic, and it's certainly not as sexy as marketing, where we're selling lamb chops to the Chinese or socks to the Chinese or whatever. But it's important because it's useful information in terms of us understanding why prices do what they do, and it's useful for policy development, useful for research, it's useful for a whole range of things. And so you say, well, what's the big deal? Well, if you look across the ditch to New Zealand, they've managed to stop market reporting in the wool market. And if you try and get good information in terms of supply, particularly in the merino industry, it's really difficult. It's hard to get volumes, hard to get information about wool specifications, so length, strength, micron. So it is possible to go backwards in terms of supplying information to the industry, and so it's always useful to keep reminding people why it's good to collect information. I put this photo up. I thought it would be opposite to the talk today. It's Jackaroo counting sheep in the near Hay in the early 80s, and it's a good example. If you're on your own farm, you can count sheep. You can at the end of the year, you know pretty well what you have on hand. But as an industry, we can't. We have to survey. We can't count as simply as this guy does, is counting through the gateway. And I haven't been back to that place for 25 years, but I think there's a reasonable chance that where he is counting sheep now is Cotton Bays. So, quick background. Just looking at sheep numbers from 1950 through to this year, they go up to 180 million in the late 60s, and again in the late 80s or 89, 90. And then we start our long downturn in sheep numbers from the early 90s. And in hindsight, it just looks like sheep numbers have started to stabilise about 7 years ago, around 70 million. And in the last 7 years, they've sort of they've fluctuated between 70, 75 million. The nice thing about that graph is it shows you that flock numbers changes with time, so it's a good reason why we have to survey and understand what's going on, because the supply changes, the sheep numbers change. So sources, just briefly, there's three main surveys of the flock in Australia. One's carried out by the ABS, one's by ABARE or ABRS. The other is a joint venture between AWI and MLA. It'd be fair to say that the three groups could put their heads together and do a more efficient job. So what I've done is I've put up their estimates of the flock number for the ABS and ABARE, and I've got the wool and meat estimates split. For 2014, you've got a range from 75.5 million to 72.5 million, 71.6 million. 2015, they're similar, and then their estimates for 2016 vary by 3 million. So we do survey the flock regularly, but it'd be fair to say that we should use our resources more collegiately and fill in some of the gaps in terms of data. Now, why is it useful? So the first one I pick on is lamb supply and price. So this little graph shows for the last 20 years, along the bottom of the graph is the year-on-year change in lamb supply. So that's number of head by dress weight. And on the right-hand side is on the vertical axis is the year-on-year change in price. Now, when I talk about price, I'm just using a New South Wales trade lamb price. This is calendar year average stuff. And basically, one other trick I think I've got in there is the lamb prices lag by a couple of months, but that's only a small detail. But basically, year on year, a change in supply accounts for about 70% of the change in price. So I reckon that's quite useful, because you see a lot of comment on why prices are going up and down, but the first thing you need to look at is what's supply done over the last 6-12 months. That's going to give you a pretty good handle on why price should be moving or changing. It's not going to tell you what's happened this week or last week in the markets, and you've got seasonal effects and all those other things, but in terms of big picture, supply tells you about 70% of why price has moved. It's the major driver year on year. So you've got another 30%, which is trends, change in structure, change in export markets, all that other stuff, exchange rates. But supply is really important, and it's very useful. So how do you estimate supply? Well, my cheating way is to get an estimate of the flock number and then multiply it by the lamb offtake. And now, when I say lamb offtake, I'm talking about the number of lambs we sell in a year as a percentage of the flock. So this graph shows you the lamb offtake from 1980 through to this year. And you can see from sort of 1980 through to the end of the 90s, it was reasonably stable. We were selling sort of somewhere between around 10 to 13% of the flock as lambs, and then from then on, the lamb offtake starts to change, and it sort of it rises, and now it's above 30%. If you're in New Zealand, just out of interest, it's about 65%, but that's a different sort of flock altogether. And so there's obviously a structural change going on in the flock, and if you talk to people like Sandy, they see that structural change happening in their benchmarking data over the last 18 years, and it makes forecasting difficult. And the reason I say that is if you look at say the MLA forecast for lamb production in the last 6 months or so, they keep putting their lamb offtake in at about 28-29%. Now I can see why they're doing it, because they're not sure exactly what the lamb offtake should be. But the lamb offtake keeps holding there about 30-31%. So we're selling a lot more of the flock as lamb. It's a really good example of why we need the survey, because you get these structural changes in the flock, and we need to keep track of them. There's change going on. So if I put that together into a little model to look at the year-on-year change in lamb price, how does it work? So the graph here is exactly that. So you've got the blue line is the year-on-year change in lamb price, and the little reddish line is a model, and the model is simply based on the change in supply, and it's got one little foreign exchange factor in there as well, but that's all there is. It's just two factors, and that's for the last, from the mid-90s onwards, and does a pretty good job. It's telling us about something like about 80%, I think, 75% of the efficiency in terms of why lamb prices changed year on year. It sort of helps again, you understand why changes are going on, helps dispel or hold back various myths that can develop. So in that little model, you've got the year-on-year change in lamb supply, and we've got a year-on-year change in the exchange rate as a secondary factor. And now, if you have a 1% year-on-year change in the lamb supply, that equates to about 2.4% change in price. A 1% change in the exchange rate, it's about 0.5%. So you can see, relatively, the lamb supply is by far and away the dominant factor. Over the last 20 years, the absolute median change, so what can we expect in terms of supply to change year on year? And the middle number's 6%. So half of the time we've had a change more than 6%, half less than 6%, and that leads to about 13.5% change in lamb price. Exchange rates, again, is only sort of small and leads to about 2% change. So I was talking about some of the structural changes, such as the lamb offtake. This is another one that's, and I'm not sure actually how kosher this is, but it's interesting. It shows you the, again for the last 20 years, the bottom row is the proportion of lamb consumed as, proportion of red meat consumed, or meat in Australia consumed as lamb. And the vertical axis is the lamb price in relation to an average of the all meats, and all meats being beef, lamb itself, pork and chicken. And so the proportion of red meat consumption in Australia that lamb is accounted for has declined from about 23% in the mid-80s through to about 9% now, yeah. About 9% now, and there's a really neat correlation with the rise in lamb price in relation to the average meat price if you go into the butcher shop. So I haven't sort of tested this against someone who actually might know better, but because it's a real issue. Well, it's an issue. It's when you watch lamb prices, you can see them picking up over time in relation to the other meats, so there's a reason for it. So anyway, it's good news, isn't it? What about mutton price? Mutton price is a bit messier and not as efficient. So this is a similar scattergraph to the lamb price and supply. So along the bottom you've got the change in sheep meat supply. So sheep meat is lamb and mutton, and on the vertical axis is the change in mutton price. And basically sheep meat, the change in year-on-year change in sheep meat price supply accounts for about 50% change in price. It's not. Now I think part of the reason for that is that we're talking about finished stock here, and you've got the store stock market in the background, particularly in drought years, pushing mutton price around. But still, the principle holds that supply is a major driver of price. Similar little model to before, with the in this case we're modelling the change in mutton price year on year, and the inputs to the model are the change in sheep meat. It does a reasonable job. It's telling us, it explains about 2/3 of the year-on-year change in mutton price. Sheep offtake. So we talked about lamb offtake before, which was number of lambs sold as a proportion of the flock. So this is the number of adult sheep sold to abattoirs as a proportion of the flock. From the early 70s, when the ABS data becomes available. It's highly volatile. If you looked at that lamb trend, it was quite consistent, went up and down a bit, but it was reasonably consistent year to year. This is another issue altogether. And so it varies from sort of 6% of the flock up to 17, it's 15%. Oh no, 17 in the early 70s. And when you look at it, this is the factor that explains changes in flock size quite well. So this is the mechanism by which the flock size in the main has changed. We adjust how many adult sheep we sell. So this is a graph this is the previous graph with a few additions. So we've still got the sheep offtake in the red line, and in the blue line we've got the flock size from 1973 onwards. Now the grey line is where the sheep offtake is less than 10.5%. So about 10 to 11% is neutral. So if we're selling about 10 to 11% of the flock as adult sheep to abattoirs, you basically expect the flock size not to change. If we're selling more, say 14%, you expect the flock size to contract. If you're selling less, we did that most recently in those wet years of 2009, 2010, or into 2011, you expect the flock size to pick up. If you do a similar analysis for New Zealand, it works well with the thresholds about 12%. We're about 10.5, they're about 12. Again, a different flock structure, but doesn't always work quite as well as you'd like. Last year we were selling about 14% of the flock as adult sheep to abattoirs. It just looked like the flock was going to contract, and so far it hasn't on all the evidence in terms of wool production and lamb production. But it's a nice cheap indicator of where the flock is off to in terms of size. And if you take the last couple of months worth of last 3 months worth of sheep sales to abattoirs and extrapolate them out to annual data, the offtake's down below 10%. So you can see the intention of the industry is to expand the flock, and that'll depend on spring rainfall, of course, but the intention's there. What about wool? Well, overall, the overall wool price tends not to be responsive to supply, so it's driven from the demand side. But within wool, you've got all the premiums and discounts operating. So one of the classic ones is fine wool premiums, and this little graph shows you the line is the 16 micron premium change in 16 micron premium to the medium micron, and the bars are the rolling 12 change in the rolling 12-month supply of 16 micron wool for the last decade, and explains it pretty well that when supply increases, the fine wool premiums come under pressure, downward pressure. When supply decreases, fine wool premiums tend to pick up. Now the trick there is that you're trying to look at the supply from a processor's point of view. So you're looking at what supply has done over the last 12 months in comparison to the previous 12 months, not looking at this month or the last 3 months. So you're sort of taking a longer term view. And so in terms of supply tends to, well, it's giving you really good information in terms of why premiums are doing what they're doing. It's not going to tell you everything, but in this case it'll tell you about 70%, or maybe a little bit less, about 2/3. And that's useful because, you know, in the last couple of years, how much have you heard a comment or seen a comment about that the demand side's collapsed for fine wool and it's all over, blah-de-blah. And you know, there might be there's probably an element of truth in terms of fashion swings and cycles, But you look at this and go, well, I know what I've got a pretty good idea why 2/3 of why fine wool premiums have been under pressure. Okay, we can talk about the other third, but this is the main driver. What about the longer term trend in fine wool premiums? So this little graph looks at the proportion of 16 micron wool in the merino clip, and when you talk about wool, we have to start to talk about merino and crossbred, because merino is down to about 80% of the clip, down from about 95% in the early 90s, and it's sort of gone back to where it was in the 50s and 60s. It was about 3/4 of the wool clip. So this is the for the last 20 years, no, last 15 years, I think, 16 years, this is a proportion of 16 micron in the clip along the bottom axis, and the vertical axis is the premium for 16 micron to the median micron. And you can see there's a couple of high dots there, and they're at for financial year 2000 and 2001, where the premium for 16 micron was about 450 to 500% to the median micron, which at the time was 21 micron. And then if you go to the other extreme, the last 2 seasons are down, where the supply of 16 micron is about 4 to 5% of the clip, and the premium's much lower. Now, that's a structural change in the industry, and that's not going to change. And it's a structural change driven by the supply of the increased supply of 16 micron. So anyone who's looking back and wanting a premium of sort of 200% or so for 16 micron versus 19s or 20s is going to be disappointed. And the only way we get back there is if we reduce the supply down to below 1% of the clip. But before you get too upset, that if you look at that trend and you can work that trend back to a percentage premium per micron, it's still about 7 or 8% per micron, the trend. So I understand that's not too bad a micron premium to have. What about broad merinos and supply? The answer is it's a lot messier and a lot less clear. So this shows the change in supply for 23 micron versus 23 micron discount versus the supply of 22 to 24 micron wool from the late 90s onwards. And the supply explains about half, only about half of the change in the discounts for that broad merino wool. And I think part of the reason that there's alternatives. You know, if you get stuck, what do? We whack a bit of crossbred in there. If we get stuck, where else? We can go to South America, and they grow a lot of what we call broad wool in South America. But so supply is giving us less of a picture, but still explaining about half the change in premium. There we go, Wolf. If I put it together and just look at a flock size model. Now, this is the actual change. The blue line is the actual change in flock size from the mid-90s through to now. And the little things that look like Sputniks are an ICS model of the change in flock size. Now, the interesting thing there, it lines up pretty well. I think the actual Wool Forecasting Committee's estimates of flock aren't always what they should be. But now the interesting thing about the flock size model is this is driven basically by a wool wheat price ratio, average change in the wool wheat price ratio, and the change in the amount of sheep we slaughtered 12 months ago. And that's it. It's very simple, and that makes sense because, you know, if you got in a theoretical farm, I've got a spare paddock, what am I going to do with this? What enterprise am I going to put on there? Well, you're logically going to put an enterprise in there that you think will give you a better return. So that wool-wheat price ratio is sort of trying to model that in a simplistic way, that decision making. And for what it's worth, the models, because we've got the price ratio data from a year ago, that's in the model. We've got the sheep slaughter numbers from a year ago, that's in the model, and it's saying we should see a slight increase in the flock in the coming year. It's good. So, but being of a sceptical nature, which Sandy is, he'd say, what can go wrong? And the obvious thing can go wrong would be a failure of spring rainfall. The only other things, we've put a couple of dummy variables in there. But anyway, we can go on. What about El Nino? What's that likely to do for production in terms of lamb and mutton? So I've gone back over the last 30 years, I think, for this. And this gives you the average change in supply, basically for for an El Nino spring over that financial year, and an El Nino will give you a 2% increase in mutton, 1% decrease in lamb. La Nina is a bit more interesting. It gives you a 4% decrease in mutton, so you hold on to sheep more, a 1% increase in lamb. So, to be fair to the Bureau Met, the El Nino years do have those nasty droughts tacked into them, so it does change your risk in terms of getting one of those nasty droughts, but that's your average effect. The average effect is pretty small. In terms, if you're looking at all the wool production regions, an El Nino year basically drops the average rainfall decile by 1. A La Nina year lifts the average rainfall decile by 1. So the average effect's small. So just to wrap up, flock size underpins lamb supply, which explains about 75% of lamb prices. Underpins sheep supply, explains about half mutton price change. Underpins wool supply, which explains quite a bit about wool premiums and discounts, or the price structure within the wool market itself. So it mightn't be sexy, but measuring the flock size is very useful and helps us understand why prices are doing what they're doing. Hopefully keeps the myths at bay. Thank you.